liability and it pays out. So the other thing that changes is that because the lease is paid out over time, no longer is it an instructional cost in the subsequent years. It's now debt retirement or debt service. So a few little changes there. Okay. We go to the next page, we see that same information that we just talked about in those numbers. Here's the broken down into pie charts. You can see here that the property taxes are 44% of our total revenues. The state aid is down to 29%. That continues to kind of dwindle away as most districts will tell you across the state that even though the state kicks in more and more money, they're still trying to push as much back on the local taxpayers that they can. And then if we look at our functional expenses there at the bottom, the instruction and instructional related services, that's function 11, 12, and 13. Basically, that's what happens in the classroom or is done towards professional development and whatnot. You can see there 54%. Well, we're in the instruction business. That's exactly where we should be spending the bulk of our money. Okay, now from there, the rest of the MD&A is just some additional information. I'm going to skip on through it and get into the financial statements themselves. They begin with Exhibit A1 on page 26. Now, the information that's on Exhibit A1 and B1 is exactly the same information that we talked about in tables A1 and A2. The only thing here is there's a little more detail. So I was mentioning the receivable from the state. You can see they're due from other governments, a little over $10 million. That's majority of that money comes from the state, either through the foundation program or for grants and whatnot, where we, all of your special revenue grants are what are called expenditure-driven grants, in that we have to spend the money first and then do the drawdowns and claim them. So as of the end of the year, you owed almost $11 million at that point. There's kind of a breakdown on your capital assets. You see that right-of-use assets? That's what we were talking about, that $862,000 there. Those are basically those Chromebooks. If you go down the page, our accounts payable, which are things that are paid out, throughout basically 30 to 60 days after the end of the fiscal year. The accrued liabilities, that's your accrued wages. In other words, we owe teachers for the months of July and August. So that number is there as well. So our total liabilities there comes back to what we saw in table A1. And then down at the bottom, our net position broken down into what we've invested in capital assets, what we have on hand for federal and state programs, what we've got set aside for debt service or debt retirement, and then other programs and whatnot, and then what's unrestricted. If you go back and you look at this this same page last year, you'll note that unrestricted number was a negative number last year. This is improved because of the amount of money that y'all brought in during the year, improved it all the way into the positive. Now, one of the things I'll just point out now, because I don't want to talk about it later when we get in the back of the report, but you've got basically 6 accounts that are on this financial statement that relate to your pension plan and the TRS care. Y'all participate with all the districts in the state, and so a few years ago, GISD Statement 68 and 75 came out, and so basically, because y'all are probably not using the right term, but partners with the state on these retirement and benefit plans, you're required to bring your percentage share of that pension plan onto your financial statements. And you don't have any control over it. Had one district ask me, well, could we just pay more into it to get the liability off the financial statements? And you could pay more into it, but you wouldn't change the amount or the liabilities that you have on your books. Because effectively, you wouldn't even get credit for it, because you are percentage-wise, the way it's taken, they look at the total payments that the district's made, and then it's a percentage of the total, and then it's allocated out. So the one things that you need to know about this year is that interest rates have increased, which makes the assumptions that are used to determine what the liabilities are change, and they change dramatically this year. I think if you'll go back last year, you'll see that the liabilities have gone down significantly over last year. And so just remember that those things kind of impact what your bottom line is going to be. It doesn't mean that you've paid out money or that you owe that money, because it's a number that's going to change every year, not based on what you pay, but based on how the fund performs at the state level. Okay, and then Exhibit B1, the next page, this is the same thing that we saw in Table A2. It just has a little bit of a different presentation. It starts with expenses. It looks at things that charges for services like cafeteria fund, athletic events, things where y'all generate money that specifically relate to those activities. Then you have operating grants and contributions. The majority of that is money that come through into your grants. There's also a big chunk of that is what's called TRS on behalf. The state pays basically the district's, the lion's share of the district's portion of its retirement costs, and so those things is kind of the way you account for that. You show a revenue that basically mirrors the expense side, and so shows up. The interesting thing is you'll see some negatives in there. You think, well, why would a revenue be a negative? Well, some of those things relate to the state has contributed outside of the TRS program, and what that does is that basically reduces the amount of the TRS on behalf number. So a lot of numbers moving around and whatnot, but it's not that it's incorrect or that it doesn't present a true picture of the district's activities. It's just that it shows up as negative numbers. And then we get down to the bottom there, you'll see that under the general revenues, you'll see your property taxes, you'll see your grant and contributions not restricted to specific programs. That's all your foundation aid and your per capita or your available money that comes from the state. But you can put all that together, you'll see there that the change in net position, $9.2 million, and added to the beginning of the year comes back to our ending net position of a little over $18 million. Okay, so we've talked about the government-wide stuff enough. Now we get into what are called the fund financial statements. The fund financial statements are presented on the modified accrual basis of accounting, which basically means that we don't have capital assets, we don't have any long-term debt. We do have receivables and payables, so you can't call it a cash basis financial statement. But it does more mirror how cash flows through the finances of the district. But what you can see here is it's broken down the general fund, which is a major program, or a major fund, the debt service fund, the capital project funds, because of the dollar numbers and how they relate to the other funds, are classified as major funds, and then the other governmental funds, which is everything else. And so you can see here that the general fund had a little over $23 million in the bank account as of the end of the year. The debt service fund, $5.6 million. The capital projects funds, a little over $4 million. Now that capital projects fund, I'm sure y'all know about it, but you know, that's money that y'all have moved out of the general fund at some point in the past and during this past fiscal year to allow for capital projects and repairs and major overhauls and whatnot, and then the other governmental funds. So you can see there that our cash and investments a little over almost $33 million as of June 30th. Property taxes are due from other governments. You'll see there, comes back across all funds, that $10 million. So our total assets for the general fund is a little over $29 million and $48 million across all funds. Our liabilities there, we talked briefly about the accrued wages payable, accounts payable and whatnot. $7 million across all funds. Then we look at our fund balances there. The general fund's fund balance, $24.5 million. The debt service fund, $5.6 million. The capital projects fund down to $2.4 million. And then the other governmental funds. The largest number in the other governmental funds, like I said earlier, that most of the grants are expenditure driven, where you have to spend the money before you get the money. But for every dollar you expend, you earn the revenue. But so they basically have no equity. So what you'll see here, the biggest chunk of that money is the balance that's in your food service fund. Because it's kind of a partnership program for both federal dollars and local dollars. And so, but what you'll see there, then you get into some other things. The campus activity funds are listed as there, as well as some other funds, different things, specialized types of things that we have to account for that way. Now, if we'll go to Exhibit C3, which is on page 30. Here's what my partner always liked to call the meat and potatoes. Here's your revenues, here's your expenditures, any other financing sources and uses, and then the net change in fund balance there at the bottom. But you can see the general fund generated $52 million in revenue. The debt service fund a little over $7 million. And then across all funds, $79 million in total revenues. If we look at the expenditures, the general fund, almost $49 million this past fiscal year. The debt service fund, 6.5. The capital projects fund, 4.2 million, and 18 million throughout the grant funds. So a grand total of almost 78 million. That gave us a almost $3.5 million positive impact in the general fund. The debt service fund went up 675. The capital projects fund went down. Of course, we put money over there and then we spend it out, and so that's somewhat to be expected. And then the other governmental funds, an increase of 1.2. We'll see what the cafeteria did in a few more pages, but I can tell you that the majority of that's the cafeteria fund. Then we talked earlier about the leases. That's $644,000. That was the value of the Chromebooks that were purchased. This put on a lease agreement, and then we transferred some money between funds, and so kind of go across the page there. Put all those things into account. Then you look at the net change in fund balance. What's the bottom line? What happened? You can see the general fund increased $793,000 for the year. The debt service fund, $675,000. The capital projects fund went down $850,000. And so a grand total across all funds, 1.8, almost $1.9 million. We add those to our beginning of the year fund balances, and then we come back to those same ending balances. Now from there, we have some schedules on the workers' comp fund, and then some schedules on scholarship and capital or student activity funds or custodial funds. I'm going to skip those unless somebody wants to talk about them, and we'll get into the notes, the financial statement. The notes just provide the reader of the financial statements some explanation as to how some of the numbers are arrived at, gives us some further definition on some things. We'll skip on over to page 46. Here's the note on capital assets. You can see here how much we've invested in buildings, vehicles, equipment, whatnot, how much we've depreciated those down. And then it's kind of a secondary thing there. You'll see leased assets. Talked about the leases. Here's this addition, this change from what we've seen in the past. If You can see there that $906,000 in leased assets, and then we don't really depreciate them. We amortize them over the life of the lease, and so, but eventually when the lease is over, it will have no value to the district. So then the next page, we get into our long-term obligations. Well, how much do we owe? I think everybody is concerned or wants to know how much do we owe. We started the year off at $87 million. We added, what was that, 689,000. We paid off 5.6, almost 5.7. So we're down to 82 million as of the end of the year. Now, for those of y'all that don't know, the accreted interest payable, those are effectively, when you issue bonds, you can issue effectively what would be more commonly referred to as a zero coupon bond. Well, under GISD accounting standards, we have to account for that accretion of interest over the life of those bonds. And so when we got ready to pay them, you can see there we paid $3.2 million of accreted interest off this year. One reason why maybe the bond principal isn't as much in the current year as maybe what the total payments are, because we're paying that accreted interest off. I believe there's only maybe only one more payment next year till those bonds are completely paid off, or those capital appreciation bonds are paid off. Then you go down there, you'll see the bonds. You can see that the $69 million broken down. Then you'll see maturity schedule. How much do we owe next year? You can see there, just if you look at the 23 versus the 24, it shows the impact that those accreted interest bonds have. You can see that our principal payment is only $1 million, but our interest is $4.9 million. And while we'll continue on down the page, we get to you don't call because when they redid the statement on leases, they're called right of use leases now. So if you had old capital leases, which is a lease where you were financing, where you transfer ownership at the end of it, those are now added in with notes and tax maintenance notes, and they're all called direct borrowings. So just some new terminology. It's not really anything different, just different terms. But you can see there that maintenance tax notes, and then we've got a loan on some buses and whatnot that are identified as direct borrowings. You can see the maturity schedule there. And then the right of use leases, that Canon Financial Services relates to copy machine. And then the inside investments relates to the Chromebooks that were purchased in this fiscal year. Then over the next 10 pages is what I talked about, the pension stuff earlier. I'm going to skip them because I don't really like to talk about them. I mean, if somebody wants to discuss them, I can, but effectively, these are just numbers that basically TRS provides for the district to include in their financial reports. So the rest of the information is really just generic information. I will point out on page 59, I always like to point this out because state funding is kind of a strange anomaly. You get paid based on numbers that you turned in either last year or the year before, and then you turn around and you submit information or PEMS information to them. Then the state comes along and kind of gives you a calculation of what you should have earned. Then your audit report goes in and they get the tax information, and then they remassage all the numbers again, and then sometime along about April or May, they'll either send you a notice that says they've overpaid you, or that they've underpaid you. And so what we like to show in this schedule here is is what the current year summary of finance showed. That's the top line. The prior year settle-ups, those are numbers of things that we received during the year that related to prior years' funding. So that gives us our total financial statement earnings. And then if we look at the financial statements amounts down there, the receivables, the scheduled payments, those are payments because y'all stop at June. You've still got payments for July and August that have been scheduled to be made by the state, and so that's what that number represents. And then the bottom number represents, based on the attendance data and whatnot that's been submitted, what it looks like that we will be overpaid by the state in the current year. So the best thing to know there is that that overpayment's already been accounted for in these financial statements. So we're not going to have to pay that to the state. We just won't be paid that by the state in this next fiscal year. We've already got it in our bank account. And so it's not an uncommon thing. It happens at every district goes through the same process, whether it's an overpayment or a receivable. So some people would say that that's just a nice interest-free loan from the state. As long as you know that it's there and you maintain it and you monitor it, it's okay. It's when that gets out of control that you find your district in trouble. So I think we're in good shape here. Everybody's aware of it and we know what's happening. Okay. The prior period adjustment there on 60, that change in accounting principle at the top of the page kind of explains the lease change. The prior period adjustment is what was the effect of that lease change. You can see there it's only $598 because not only did we add the assets onto the financial statements, we also added the liability. So very little change overall as from a prior period adjustment. And then if you look at the bottom there, that expenditures over appropriations, effectively the data processing services, that's the purchase of those Chromebooks. And so that's how it impacts your budget. So as we go forward, we need to make sure that those things are accounted for properly. We can see that on page 62, which is the comparison of the actual with the final amended budget. Now, I guess conceivably the most important line is the total expenditure line there, where it shows that we budgeted for $51 million. We only incurred $49 million, so we're about $2.5 million under budget for the year. And if we look at the top line, the next top, the total revenues there on the same thing, you can see there that we generated $1.8 million more than we had actually estimated in our revenues at the beginning of the year. So the combination of those things, of course we didn't plan on moving the money to the capital projects fund and those types of things, but when it was all said and done, even with all those activities and what we did, our end of the year fund balance was still $1.5 million greater than what we had anticipated it being. Okay, I'm going to skip over several of the next pages, go straight to page 69. This is the schedule of delinquent taxes receivable. We all pay taxes. You can see here, I will point out that remember that these are not the current numbers, but the year before, or I know everybody got their tax or their appraisal notice for the current year, and everybody's talked a lot about those. Well, this predates those notices, so these are for the basically the property values as of January 1st, 2021, I believe is what this would be, yeah. So you'll see here that on $2.9 billion, we levied $33 little over $33 million. We basically collected right at that. Still got 957,000 uncollected as of the end of the year on the current levy. Now, what I'll tell a lot of people is you can take the current year levy and compare it to the beginning balance of the prior year. So if you do that, you'll see that 957 that we ended the year this year would relate to the 871 that we ended last year. And so while that's that's about an $80,000 increase overall, the important thing to note is that typically throughout time, property taxes increase anyway. So if somebody that owed $100 didn't pay their taxes last year, if they didn't pay them again this year, that would have gone up to $110, so to speak. So you got to kind of put that into perspective as you look at these things. If you look at the grand total of 2.2 versus 2.3, slight increase. I would tell you to continue to work with your delinquent tax attorney, make them aware of the fact that you want to get everything collected as you can. And I think for the majority of, as just me speaking as a taxpayer, I think I would, since I've paid my taxes, I just assume everybody else paid theirs too. But that's, that's a personal observation. Then from there, the next page, I just want to point it out because it's the cafeteria fund, the school lunch program. You can see here that what we generated in revenues and expenditures. And if we look at line 1200, the net change in fund balance, you can see that it increased some $954,000 this past fiscal year. Okay. With that, I'm going to skip down to not the very last page, but the last couple of pages. Page 75 is the schedule of expenditures of federal awards. How much does the district benefit from federal funds that it receives? And you can see here, if we look at the grand total on the bottom of page 76, a little over $18 million the district benefited from federal funds this past fiscal year. I didn't actually look at last year's, but I know that's a pretty significant increase overall, just because of the various programs that are in place and the numbers that have been generated. Particularly look at the elementary and secondary school emergency relief, $6.9 million. So, okay, and that's basically it. I know I've gone through it pretty quickly, tried to kind of hit the high points and the low points, but does anybody have any questions? I'd be happy to answer anything that I can.
I guess we could talk later about the changes in the rental of the Chromebooks, because that's new information for us. We had made that decision this year, and we need to talk about, we hadn't decided if we're doing it in 3 years or not, but we need to look at the tax impact to see if that is beneficial and get your recommendation on that. So Mr. Falk will be contacting you to see what that advice could be, because we want to make sure we're making the right decision moving forward.
Anybody have any questions?
No, you answered my question about the TRS, huh? Teacher retirement, so, yeah.
Yeah, I guess I just had one brief question about that.
Yeah.
On the TRS, there was some questions brought up in the public about that and how we were responsible for picking up the tab if for some reason TRS failed. Is TRS
Interesting
in
comment.
jeopardy of failing? And what would be the condition for it to be failed?
No, I mean, here again, you don't really have any control because it's the legislature that controls it. So the state would have to be the point I would make at this point anyway, and if I can find the right page here. On page 49, see right there, it's kind of that little stuff there. I have a hard time reading it, but when time you put all this together, you just have to shrink things down to look at it. But you can see there the 2021 TRS is always, as it impacts your financial statements, TRS couldn't actually have their audit done and then get all of these numbers to y'all in time for your audit to be done. So basically, the standard allows for up to a 12-month delay. So we're reporting numbers from August 31 of 21 in your June 30th, 22 financial report. But if you'll look at that, that is TRS as a whole. Those numbers that are there, that, what is that? $227 billion, is that right? Is that the first number? That's basically the liability that they've calculated is what they owe if everybody were to continue on at this point in time. And if you look at the number right below it, that's basically how much money they already have towards that number. Now, it's not a huge difference, it's a big difference. It's $25 billion. But if you look at that percentage there, that 88.79%, that means that the pension plan is 88, almost 89% funded at this point, okay?
And in 2020, it was 75% funded.
That's
so
right.
It had a better position in 2021.
It's gone up, yes it has. And, you know, just 5 years ago, if you talk to people about pension plans and whatnot, they would say that if you were 70% funded, you had a very sound pension program. I mean, that's not anything that's, you know, hard, fast and whatnot, because each pension plan is different in and of itself. But because this one has got, you know, as much there, I don't see it ever going down. I mean,
Okay.
you know, so
Well, thank you for that.
that's just my opinion, but
And then the other question I wanted to ask about that was, you mentioned that our obligation was 5 million, a little over 5 million, but that is part of TRS. The number was, I'm sorry, I have the same problem with my eyes, so I got to figure out what page it was on. But you said before we get
Well-
over there, I wanted to mention TRS. I forget what page that was. But
well, your pension, your percentage is 6.9 million
okay.
as of the end of the year.
And that means that what we paid into TRS and what the teachers have paid into TRS. Is that correct?
Well, that's just your percentage liability of what you would be responsible for
Okay.
today. That's how much that's coming down onto your financial statements. You know, if you look at page 56, for example. Nah, I'm on the wrong one. That's the health insurance. On page 52. You'll see this $6.9 million. That's the district's proportionate share of the unfunded liability at the state level. Okay? And then the state's portion of that's 11.1 million. And so conceivably, I guess, you know, if it went belly up, you'd have to come up with that number, but I can't see that happening.
Okay. Okay.
I mean, I imagine it would be much like if Social Security went up. I think there'd be anarchy in the streets.
Probably.
I have a question to ask. I have not heard, are you saying that we have had questions regarding TRS?
There was just a public group in the community who's raised questions about the failing of the TRS and whether or not the district will be in a position to pay that money were we to take on any other debt.
Okay, all right.
But because it was asked, and I saw it, I wanted to ask, since we have him right here, I wanted to
Yeah,
ask his opinion.
that's a good, we got a good answer to a question that somebody has asked for.
Mhm.
Okay, I got it.
Okay, thank you for that clarification.
Sure.
Did anyone else have any other questions?
The health insurance is some of the same way?
It's the exact same way.
Okay. Because that's another question, it was just the TRS and the health insurance, it was the main question they had. I'm
Right.
glad you can answer their question tonight.
Yeah. The health program is a kind of a whole different ball of wax because it's a pay-as-you-go program. They don't have a whole lot of, of funding that's there. But I suspect, and I'm not an attorney and I'm not a TRS aficionado, I guess you'd say, but the healthcare doesn't have near the financial stability that the pension plan has. And if you look in, there are some schedules back over here on page 65, for example. If you look back on this particular schedule in 2017, which was the first year of GASB 75, you see that little percentage down there, 0.91%?
Yes, sir.
That's how much assets they had on hand to cover the liabilities that had been estimated. And if you go over to 21, you'll see that that's up to 6.18. So the state is much aware of maybe the potential for healthcare issues and whatnot. And so over the last 5 years, they made definite strides towards that. But if you look at the components of the TRS, what you pay in, or what teachers pay, what the district pays, and what the state pays, you'll see that those rates have increased fairly significantly from a percentage standpoint over the last 5 years. So I think it's something that the state legislature will continue to push those numbers up. Now, employees end up with less in their pocket and districts end up paying more along the way. But I don't think there's been no indication that the fund is in dire financial straits that would create problems. When it comes to, here I am, I don't know enough about it, I guess I shouldn't say, but healthcare programs, I don't think they're bound by law that they have to continue on. I'm sure the legislature at some point would probably change something to do that, but I think when you start looking at pension plans, you got a lot more requirements that you have to follow through with. So I don't look for either one of them to go away anytime in the near future.
Okay.
I don't have any other questions. Anyone else? Thank you for your time.
Okay, well, let me take this opportunity to thank Ms. Booth and all the rest of the staff here at the school. We appreciate their help. Sherry, she's not here tonight, but
She's not feeling well.
I'm going to step on this, I think, before it's over with. But we appreciate their help. I know Jessica was 8.5 months pregnant, and she was bopping around here doing things. So we appreciate their efforts in helping us get the numbers and get them put together.
Thank you.
All right. Thank y'all.
Thank you, Robbie.
The only other note I would say for the board is that where we have the fund balance of June 30th, and it says 24.54, that is 4 million left because we transferred out the money for the architectural
After this.
after this. So this was So it is less than this,
It's
just FYI when you're looking at it.
18 now, or?
20.
20.5. Okay. No. Okay, sorry.
You're good.
That's deeper in July. So, can I get a motion?
I move the Board of Trustees approve the annual financial report for the 12-month in June 30th, 2022, and recognize that it has also been reviewed by the trustees and will be appropriately filed with the Texas Education Agency as required by Educational Code 44.008D.
Second.
With a motion by Roger and a second by Mike, all those in favor?
Aye.
Any opposed? Motion passes 7-0.
We did any questions?
Can I ask a question?
You're right.
Can I ask a question real quick?
In the
Or to Sharon about the, I wanted to ask about the 2013 and previous years, the uncollected tax. It's still at around 400,000. That's what it was when we switched tax attorneys. So I would like to see what efforts are being done to collect.
Good. I had written down when I saw that dollar amount as well. I'll ask him to present, see what's going on.
There was one year that was a huge, it was 120,000 difference.
Definitely gone down, but I will ask him to come in and give a presentation on that. Thank you for that.
The older it is, the harder it is.
Okay, we're going to go into closed session at this point. Closed session, any closed meeting will be held for the purposes authorized by the Texas Open Meetings Act, Texas Government Code, Section 551.071, concerning any and all purposes permitted by the act, including but not limited to the following sections and purposes. 1, Texas Government Code, Section 551.071, consultation with the board's attorney on all subjects or matters authorized by law. A, consider legal advice regarding personnel issues. B, consider legal advice regarding any agenda action item. 2, Texas Government Code, Section 551.074, for the purpose of considering the appointment, employment, resignation, evaluation, reassignment, duties, discipline, termination, or dismissal of a public officer or employee. 2A, closed session pursuant to Section 551.074 of the Texas Government Code to deliberate the appointment, employment, evaluation, reassignment, duties, discipline, or dismissal of a public officer or employee, or to include consideration of employee resignation for good cause. And we will go in at 6:26. Our cameras on?
Yes, it was all.
I guess we'll go back there, so because we're going to come back for one thing. So we're going to give you that feedback. So, thank you, sir. And you'll email it to me in the morning?